We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about the US dollar, and we're going to talk about how you should be bullish long term but bearish short term. Now short term is 3 to 6 months, and long term is obviously a year or 18 months. Now this is the pattern in front of you. You see in a typical accumulation Wyckoff pattern, and the only difference is the leg into the pattern is from below it. So we've had this rally into the pattern, and we've done some, selling here, and now we're looking at, we've done some test of resistance, and now we're getting this spring type action, or this testing terminal shakeout type action. So let me just scroll back up the price. For example, we had the big lead in. We've had some selling and adjustment of portfolios here. A fade of resistance. A bit of a weakness, but now we've had move up to resistance. So we've had this rather big build up of the US dollar, but overall I believe it's an accumulation pattern that's now going to suffer a test of support, do some basing, and over time, probably next year, you'll see the big rally. Okay, so as this pattern has taken over years, this is a 5 or 6 year pattern, but we're going to get a push down here for fundamental reasons which are obvious. One, the US election. Two, the demand destruction in the US economy requires new sources of demand, and one is to lower the US dollar. Three, the illusion that Europe have got its act together to get a package to get over this COVID crisis. Right, so this is where we are. So overall, long term a bullish pattern, but it's short term bearish. The dollar could go down to 88, 85, or even 84. Now let's have a look at this is the demand destruction I was talking about. This is the from the Fed database. The consumers crashed, exports have crashed, and businesses have crashed. So a lower US dollar can help with at least two of these lines, the black line and the green line. So demand's got to come from somewhere, so they need to get the US dollar down. Also, if I scroll down to the chart, for example here, we also know that the Fed and the Treasury have to sell, I think, a huge amount of US Treasuries the next 6 months. And one class of buyers they wish to attract is the foreign holder of US Treasuries, and as you can see, if they get the US dollar down, the foreigners do actually line up to buy the Treasuries. In a world of negative interest rates, where the Fed is actually paying positive interest rates, and large monies will probably be attracted to that. And if they believe the US dollar is going to rise in the subsequent months, like it's falling a bearish short term, and the US dollar comes down, you buy your Treasury, the dollar rises, that means your investment goes up. Hang on, another point. As you see here, all the squiggly lines is the US tightening standards for lending, and as you can see here, when tightening standards for loans increases, the US dollar normally comes down to offset that. So in a climate where loan tightening standards are rising, the government of the day normally tries to get the US dollar down to help alleviate the stress in the US economy. So the point about it is a lower US dollar, and I'm talking 85-ish, even 82-ish, helps resolve a lot of problems coming up in the next 3 to 5, 6 months. It helps with the stress in the economy. It helps with the demand problem, helps with the selling of US Treasuries, and obviously I would believe that the administration helps with Trump's re-election programs. As one, I believe Congress is struggling with stimulus, so Trump has done executive orders for stimulus, plus he can get the US dollar down to stimulate as well. So it's not going to come from Congress, or if it does, it'll come too late. So the US dollar, along with the executive orders, the stimulus Trump can use to help increase his chances. So that's a quick rundown of why the bearish short term, but be prepared for a big US dollar rally once this bearishness is washed out. It's not going to collapse. That talk is rubbish. So I believe somewhere around here it'll be the bottom, and we'll get a pattern, and it'll continue the typical Wyckoff accumulation pattern here. In the Wyckoff world, we have a rally in, a bit of phase B's mucking around, and now we're getting a test. We had a fade of this bull trap of resistance. We're getting a rather quick and rapid small collapse down, and then I think once we realise that once the election's over and the treasury issuance has been cleared, and they realise that the Europe package isn't so great, and they realise that all the damage done to the economy in 2021, the US dollar finds strength, and realising that deflation, or disinflation, what do you want to call it, is going to be in the year 2021, and we may get some strength. But between now and the end of the year, it's anti-US dollar trades. Thanks for watching.